Introduce the topic. So the topic that we will be covering today is the UAE Central Bank's ESG disclosure laws. After our last webinar, which covered the decree law number 11, we took some feedback, and a lot of the participants wrote back that they belong to the financial institutions industry and would like us to cover the topic that we have in place today. And while Jason and I would have picked it up, right, but we thought that the entire experience would be incomplete without having without having someone from the industry in place, right? Because for us, we're doing certain implementations with certain banks in the region, but we tend to we tend to still bring a more consultant and a solutioning approach and a perspective. So that's why we decided to have Max with us today as well. He's been a banker and an entrepreneur currently himself. So today he will be covering a lot of elements about how lots of these financial institutions should be thinking about the implementation, right? And have a long-term view to it, right? I hope. Perfect. Rasul will tell me we are recording. So perfect. I will dive right into this. So I've already briefly touched about who Max is, but telling all of you a little bit more about him. So Max is a senior leader in sustainable finance with more than 20 years of experience in banking and the finance sector across the Nordics. He founded a management consulting firm in Sweden in 2018, advising state-owned enterprises on long-term financial strategies for sustainable growth. And since 2021, he has served as CFO and partner of Full Bin Group, and in 2023 became the co-founding partner and general manager for the Full Bin for the Full Bin MENA organization. And he's currently based in Dubai. Max is recognized for his expertise in governance and ethics and for leveraging technology to enhance ESG data management and ensure alignment with international regulatory standards. Welcome to the webinar, Max.
Thank you very much. Appreciate to be here. Very exciting.
And we also have our old friend Jason. So for those of you who were not there for a previous webinar, I'll give an introduction to Jason as well. Jason is a sustainability and ESG specialist with extensive experience and expertise in advising organizations across GCC. And this is on regulatory compliance, ESG integration, sustainable business transformation as well. Today, he leads ESG advisory at HLB Hamped, where he supports clients with strategy development, ESG reporting, and alignment with global frameworks such as GRI, ISSB, and of course, UAE's emerging climate regulations. Jason has worked with leading corporates and financial institutions to design ESG policies, deliver capacity building programs, and implement the international sustainability standards that I just mentioned. And with his deep knowledge of the UAE regulatory landscape, he plays a key role in bridging global ESG best practices across the local market as well. And welcome to the webinar, Jason.
Thank you so much, Arushi, for the kind words. Pleasure as always. Really excited to get the ball rolling. We've got Max here, who brings his 2 decades of experience from the Swedish banking sector, and as we all know, Sweden is global leaders for all matters ESG and sustainability, and we are sort of following on the same footsteps, I would say, and really looking forward to today's session, and hope we can shed some light on this very new set of disclosures and requirements which has come out from the central bank. And perhaps towards the end, we'll sort of have a little bit of better understanding, and everyone can then come up with their questions and sort of really take a deeper dive into this whole topic.
Yep, perfect. Jason, I think while you have the stage, I will let you continue. I believe you and Max have a lot in place for us, so would love to get into that.
Yeah, absolutely. So again, we've got a lot of things to cover because the UAE Central Bank has come up with a very comprehensive and well-structured set of disclosures. And it's not something we can cover in a 1-hour session, but the agenda or the idea today is to sort of touch upon the main principles, the critical pillars, so to say, and cover as much of topic as possible in a way that people can digest and then sort of get a grasp of the whole situation. So I just to sort of get things going and I'll skip the preamble. So, what is sustainable finance and why does it matter? Again, the new disclosures of central bank is not something which has come overnight. A lot of the people in the banking and non-banking financial institutions, a lot of the CROs and the risk officers, they have been getting a lot of white papers from central bank over the last few months. They've been getting a lot of questionnaires from the UAE central bank. They have been building towards this whole sustainability taxonomy. Now, how they have done that is they have clubbed the world's leading taxonomies, be it from Europe, be it from China, be it from Malaysia. All those sustainable taxonomies have sort of coalesced together, and it's come together in a very elegant manner. So UAE has made it very palatable for all financial institutions, not just the larger ones. So there's a lot of communication going on. There have been, WhatsApp groups which have been formed for tier one banks, for tier two, tier three banks. A lot of the risk officers and chief risk officers are there. So the whole drive towards sustainability has now become a regulatory requirement. It is not a corporate responsibility initiative. It is not a good to have or sort of a low hanging fruit anymore. It is an absolute requirement, and how they have done this is by aligning it with the risk. So climate and sustainability risks are as important to bank as your operational liquidity or credit risks. So I think what we're going to be discussing that is going to be more of the same, but the three main you would say driving factors is the growing investor demand. As you can see, the global drivers which really push this, and UAE being UAE, it's the hub of investment. It's like East meeting West. So, you've got a lot of push coming from the investors as well. You've finally, again, secondly, is the national vision. You know how UAE takes a very organic and well-structured approach, given its economy and how it's always in the growth period. So with the 2050 net zero plan, we are currently in phase one. Phase two again begins in 2030 with a 65% decarbonization mandate. So again, big movements are going to come. The next 2 years are going to be very critical for a lot of the financial institutions. With that said, the role of finance, big, the major chunk of the economy sits with the financial institutions, and then comes the manufacturing industry segment. So again, so while Abu Dhabi, Dubai government is pushing carbon reporting for all the manufacturing companies, the central bank is taking up its role and driving sustainability through its financial institutions. So again, the role of finance cannot be sort of underestimated in this case. So, with all of these things said, I would hand it over to Max, who can then take a little more granular, take us into the details of the sustainable finance working group. Over to you, Max.
Thank you, Mr. Jason. Yeah, we have in the UAE something called the UAE Sustainable Finance Working Group, or SFWG, and that's quite unique because that organizational group brings actually together all the key players in the UAE. It's the ministers, regulators, and also the main exchanges. And this, I would say, gives the country one clear roadmap for sustainable finance. And the roadmap has three focus areas, as displayed here, is the ESG reporting and disclosure, governance and risk management, and a taxonomy. You also talked a bit about that, Jason. And this actually defines what counts as a sustainable activity. So all those three bullets here is for the foundation here for the central bank's EU guidelines, so to say. So we can continue with the next slide. So what is expected from banks in the UAE? Well, the Central Bank of the UAE has set a big goal. They are going to mobilize around 1 trillion dirhams in sustainable finance by 2030. And in order to reach these goals, the plan moves in phases. Banks has to do their own self-assessment to start. Secondly, the supervisors carry on and carry out reviews. And already by 2027, the rules will be fully part of regulation. So the message here is quite simple. The banks need really to act now and not wait until later, because it's only 2 years until we are there. Yeah, please go on with the next one. So the whole framework is built on 2 pillars, so to say. The first one is transparent disclosure. The banks must report clearly on their sustainability performances and risks. The second one is effective risk management. And this means that banks actually must manage and oversee these risks, and both inside and outside the organization. And both of these are needed, because if you only disclose without action, I mean, it's just words. And if you only manage risks without any disclosure, no one will ever actually see the progress or the results of it. So yeah, please go on the second one, next one. And based on this, we have 7 key principles for how banks should deal with the climate risks. They follow global standards from the Basel Committee, which sets banking rules worldwide, and the NGFS, which is a group of 125 central banks sharing the best practice on climate and finance. So these principles altogether are internationally recognized, but also a bit modified to the UAE market as well. The 7 areas, as you can see, board oversight, integration into business strategy, clear responsibilities, risk framework integration, monitoring and reporting, capital and liquidity adequacy, and finally, scenario analysis. So in the next few minutes, I will guide you through these principles in more detail. So please. The first one, it's about the governance foundation. At the top level, boards and senior management must take ownership and responsibility of climate risks. They need to understand the risks, set a clear risk appetite, and show ongoing oversight. Climate goals must be part of the overall business strategy. It's not a separated part at all. It's an integrated part in the fully business strategy. And also very important is that responsibility must be clear. Who is accountable, how information is escalated, and also how progress is reported in-house and outside to external stakeholders, of course, as well. So please go on with the next one. Principle 4 and Principle 5 is about the actual business and operation in the bank, the operational framework. So it's, you can say, day-to-day operations. It involves climate risks, physical risks, transition risks, and liability risks. All these must be part of the bank's normal risk framework. I'm sure you know this already. Also, banks need clear rules for when a risk is considered to be an issue or important. And finally, also, they need strong data systems. So risks can be tracked and also reported quickly and accurate to stakeholders, and any closed data gaps must must be covered. And this is a bit of the technical part, which involves also, I would say, the data management is a crucial part of Principle 5 here. Yeah, you can please go on. And finally, Principle 6 and 7 is about how climate risks can affect the capital and liquidity in the banks. So this means, I mean, for many reasons, it's important to follow up on that, because it can be actually a risk of insolvency and very bad credit rating externally if this is not followed up correctly. And we need to include these parts into solvency and stress tests. We have been working with that for many years in Europe and also in the US in many ways. And I think this is not only about climate and sustainability, to be honest. It's about having a prudent banking system overall. The scenario analysis is also required, because this is how banks can test how the bank performs under both normal scenarios and if there are a stressed situation on the market, we need to have a scenario analysis. How will the bank collaborate and handle these kinds of situations here? And it's about showing that the bank is, I mean, stable and can stay resilient in different situations and the futures. Please, next slide.
Yeah, I can take this, Max. Thank you so much
Please.
for that. Yes. Again, thank you for really breaking down those 7 principles. And I think that has sort of naturally segued us into the disclosures part. Now we have understood why it is critical and how they have come about it. And finally, what we have to do, what banks and non-banking financial institutions have to do uh, as part of these new, SFWG requirements. So, you know, we can again, they have broken this down into 4 principles. You can see systems and governance, quality and relevance, governance, strategy and risk, sustainability related products. Now, again, we can take a slightly deeper dive into this. Now, systems and governance is something which is already very strong with banks. Every bank by default has very strong governance processes in place. But what SFWG and what the central bank is advocating is that the bank needs auditable systems for sustainability related disclosures. Now, what that means is the minimization or the complete removal of ad hoc spreadsheets. Whenever there is a requirement from central bank for any matter sustainability, what happens is immediately spreadsheets are created on Excel and whatever data is possible to conjure up is conjured up and then sent across. But that is no longer uh, possible and it is no longer allowed by the central bank as well. So having an auditable system which manages your ESG slash sustainability data. So if there was an audit to happen, which it does, the data which is being fed to central bank or the SFWG has to be auditable. Your annual emissions, scope 1, scope 2, scope 3, your, footprint, your carbon footprint, all of it needs to be auditable data, which can be then assured. So what the central bank again expects here is the same level of control as a financial report in terms of your sustainability reporting. And the failure to do so will again lead to a lot of different repercussions coming up. Addressing data gaps within data governance framework. How would a financial institution go about doing this? Is by conducting a baseline assessment, understanding where the gaps are, because there must be a very elaborate and comprehensive risk register in place. Now, analyzing where those gaps are in terms of sustainability, pushing international reporting standards against your current risk operations, and then realizing where the risks are and then documenting it. That is very important. Only then can you then start the process of building a climate aligned risk register. Again, ensure timely internal reporting to board and senior management is a given. That needs to happen. And it is happening for all processes, financial and all other risks, operational, credit, all of it. Climate related risks also have to be aligned and reported in the same process, same way. So that is what the first principle dictates. Now, principle to quality and relevance. Apply materiality to focus on significant sustainability risks. Again, the central theme here is materiality. So regulators and the central bank, the SFWG itself is no longer going to be relying on I would say aesthetic and glossy narratives. It is more quantitative now than qualitative. It is not just a bank is pledging to do so and so, or it is committing to a certain target. It is getting more and more quantitative, and to decide what disclosures are important, you will need to first have the materiality done. What is material to that organization, depending on the size as well. So again, it is not just the tier one banks with mature ESG practices who have to look into this. So there is a tier two, tier three system as well for LFIs, which is created exclusively for them, and they have some leeway in terms of finding materiality. For again, I want to sort of bring this in a whole circle. Doing a baseline assessment is important to do this to get understand the materiality for the bank. Once you find the material topics, getting exact metrics is important. So you set KPIs, again, not your generic smart KPIs, the metrics which you will be, calculating, which you will be, adapting to the organization. All of that metrics has to be reported upon. So again, quality and relevance of the reporting disclosures itself is of paramount importance. And again, there's a whole capital planning aspect to it, again, which comes in later. So disclose policies, practices, performance, and governance to investors, customers, regulators, and other stakeholders. So again, it's all about transparency and whatever you have, the ability to transparently put it forward. Ensure disclosures which are relevant, clear, comprehensive, comparable, and timely. Again, all of this could be boiled down to a central theme of materiality. What is material? What are the metrics to evaluate, and those to report. So that is the very simple way of putting it. Principle three is governance, strategy, and risk. Report on governance structures, sustainability strategies, risk management processes, metrics, and targets. So we have broken it down to exact requirements. What the principle? When you go to read it, it is slightly longer, but this is the gist of it. Now, the disclosures should be framed in a way that it connects the dots, not haphazard in a way that okay, one material topic from credit lending, one material topic from customer onboarding, and that's it. So the disclosures have to be framed in a very in a way that it creates a narrative at the end. It covers your organization in a authentic and transparent way. How the board manages ESG, how your organizational strategy incorporates the transition and physical risks as well. What are the risk management processes exclusively for the climate related risks? So these are the things you need to have in place. Now, again, there's a lot of different, you can provide context and analysis is the next point that enables stakeholders to understand the implications of risk and opportunities. This is important from the term, from the perspective of someone who is not a part of the SFWG. For your investors and regulators, they want to understand that sustainability or ESG is embedded deep into the governance structure of the organization. It is not just a, you know, uh, a report which is built once a year, because that is very clearly visible and that will lead to a lot of issues for the organization itself. So understanding it earlier on, build integrating it part of your organization as uh, SFWG has prescribed it to. So this is the right time because the entire playbook has been made available by central bank. So for those who have started, they might have to do course correction on the way as per as SFWG. Those who have not started will not have to do any course correction because the course is laid out right in front of them. Principle for sustainability related products. Ensure product naming is accurate and not misleading. Now, this itself sets the tone, what the principle means. It is something which is very sensitive, and the Central Bank of UAE has a zero tolerance for greenwashing. So there is absolutely no misleading of products, because that happens quite often in this space when organizations are pledging X amount of money, and it somehow finally ends up with the fossil fuel players. So that is not something which should happen, and central bank is very particular about it, disclosing objectives, risk factors, and marketing practices clearly. So it's not just for increasing the credibility of the organization, but I think it is very important in terms of aligning and future-proofing your company. So if you're operating in UAE, you need to come into the fold and you need to align your organization in terms of the central bank's requirements, which they have made very clear through the SFWG. So you have to disclose all of this proactively rather than reactively, because that will cause issues. Provide ongoing performance reporting and ensure integrity in labeling to avoid greenwashing. Again, all of this regulatory scrutiny points to the simple fact that greenwashing of any kind will not be tolerated by central banks. So whatever disclosures are being made, they need to be gone, checked through, rechecked with a fine tooth comb. You need to really drill down and understand that this is not misleading uh, to any customer or to any stakeholder. So again, these are the four principles. Just to recap: systems and governance, which is the auditable data systems, which you need to have in place. Quality and relevance, again, centered around materiality. Governance, strategy, and risk is again a disclosure which comprehensively covers the organization, makes sure that uh, the institution is aligned with ESG, and it's not just a reporting exercise which happens for 4 weeks in 1 year. Principle four is again sustainability related products, which is towards the handling of financial instruments and avoiding greenwash. So I think, yeah, current key challenges, I think Max, it's your forte. Perhaps you can shed some light on it. You're on mute.
Yeah, sorry, I noticed that. This is more, I can see this as a bit of a summary of what we already said, but there are some challenges which actually needs to be highlighted a little bit more here. And the data gaps is absolutely one crucial part here. And it's about having accurate data and information. And it's also very important because if you base any decision on facts rather than assumptions, you are also reliable and more in line with general accounting standards overall. So this is not really a specific challenge for this part, but absolutely the data gaps must be filled, and that can be done by having control over the facts and data collected here. Even smaller institutions require tools, data, and training on this, because it will be a big launch. I mean, there are no excuses for not participating here. So the capability and having the resources in place is a crucial part. And also, finally, product integrity. It's about the monitoring of the ongoing business and the business risks and the overall risks, including the climate risks, of course, here. But the monitoring challenges is part of also the data collection, I would say. But of course, it's crucial that even smaller institutions are highlighted that this will be and is already in many countries a big issue, and also, unfortunately, very costly most of the times. So please, Jason.
Yeah, thank you so much, Max, for that. And again, a lot of different challenges, but if you had to drill down on it again, data gaps and I would say unavailability of tools to the tier 2, tier 3 financial institutions, because there's a lot of lack of information for one. Bridging that gap is important, and then providing the right tools at a financially feasible way, because the market is still young, the requirements are still new, and sort of integrating it in an organic way is very important. Yeah. So again, how do we come in? Because as this presentation is a quintessential example, you've got Fulbin, you've got Kishalbi, you've got Oren. So ESG is such a big space that it is, I would say, naive and untrue to claim to provide all the solutions under one roof. It is not possible to sort of entirely conduct a one-stop shop or an enterprise like that. So you've got banking expertise in the form of Max, who's had 20 years and above experience in the whole sustainability, finance, and banking industry, and who himself is running a massive organization with knowledge sharing aspect of it as well. We've got HLB Hamd, which has been operating in UAE for the last 26 years, and which is very well known amongst the audit and tax advisory community. We are currently ranked fifth. Just a quick sales pitch right in between. Let's sneak that in. But yes, so you've got Oren. So we're all playing to our strengths. Oren comes in with its ESG data management solution. They have been doing some really good work for the last few years, and they've made quite a name and reputation for themselves. We have been working together very closely for a few banks based out of the UAE as well, and touchwood, they have been going quite well. And I think that holistic solution of consultancy plus your subject matter expertise plus your ESG data management solution, that is finally at the end of the day what an financial institution needs, where they can rely on someone, a brand or a name which has been there for 2.5 decades, who can then source the right tools in terms of whether it be a SaaS or whether it be the right team and resources, and then be able to provide all of these, decarbonization strategy, your climate risk advisory, training and capacity building is just as important, because the financial institutions need to be self-reliant at the end of the project. It's not an annual repetitive project. Finally, once you have the disclosures in place, go for ratings, go for assurance certifications, go for further becoming more and more ESG mature, uh, followed by policy advice to wherever gaps are there, bridging those gaps again. And yeah, Arushi, you want to step in and just take the products section, maybe give a quick example of how data management system makes that entire process a bit simpler.
Yes, absolutely. Thank you so much, Jason. So, based on our experience, what we've seen is that one issue that sustainability teams struggle a lot with is that sustainability data is spread all across the organization, right? For us at Oren, we call ourselves a sustainability data company, but what we've seen is that there is no such thing as sustainability data, right? At the end of the day, all of this is your operations data, finance data, HR data, admin data, so on and so forth, on which, sometimes you do some conversions or calculations and convert that into ESG or sustainability data, right? So how technology helps is that kind of it acts like that tool that helps you, if you are part of the sustainability team, collaborate with all the various departments across your organization and aggregate the key information and data you need that can be then further submitted to the regulators, right? In addition to that, what we see is that companies don't only have to submit key sustainability information or report to their regulators. Sometimes their investors also care about this. Sometimes their customers also care about this, right? So using like our technology platform very neatly kind of aggregates all information, centralizes it, and you can have multiple outputs created depending on the stakeholder that cares about this information as well. Right. So, and again, for us, what we've seen is that with HLB Hampton Oren, it's a fully holistic end-to-end solution, right? Because today, lots of organizations are in very, very early stages of their journey, right? And for us, we today are working with multiple companies in the same sector. So sometimes it's very easy for us to bring in best practices from another organization as recommendation into some organization, right? So that it just helps them get better, right? So that's how we work together.
Well, thank you so much, Arsha. Great. I think we can summarize. We have given the 7 principles of the sustainable finance working group. What are the disclosures which are aligned with them? And I think we can wrap it up finally by saying what is the call to action? What is the immediate next steps that organizations, financial institutions have to implement? And these are some of the non-negotiables. This is for companies who have absolutely zero ESG footprint, companies who have done something but have no idea how to move ahead. So I think, Arshi, you want to take this?
Yeah. For sure, yes, and also this should hopefully also answer a question in the Q&A box by Shweta, right? Shweta, happy to elaborate on any of these aspects if you think what I just explained was not enough. So how we work with organizations, right? So typically companies come to us when they have an end outcome in mind, right? They do know that that this is the compliance, like the central bank UAE's principles is the compliance that they want to achieve. Sometimes they say that, okay, I have some time to achieve this. Maybe I want to create a GRI report. So most of the times companies come to us with an end outcome that they want in mind, right? And then we work backwards with them, adopting these 3 steps. The first step is that with this end outcome, we try to get a better picture of this, right? I think based on our experience, what we've seen is that throughout the year, right, companies keep getting multiple requests by various stakeholders on their sustainability disclosures, right? So we try to understand where this organization is, what kind of stakeholders do they have, right? Do they have any investors in Europe? Do they have any investors in US, in Singapore, in GCC, right? And because the requirement then we would want to implement a solution that is holistic and covers and satiates all of these stakeholders, right? So number one, we further enhance on that outcome that the companies want to achieve, right? We then ask them, we look through what their current practices are, right? What their current policies are, what frameworks have they implemented, what are they training their employees on these policies, what is the governance structure they follow. so on and so forth, right? We understand what their current practices is and give them a very, very thorough gap analysis. Sometimes as part of this gap analysis, we also include a peer benchmarking, right? Companies do want to see what their peers in the region and globally are doing on the various initiatives that we are evaluating right now, right? So that's number one. Second is that, like I mentioned, right, sustainability is not the job of only the sustainability team. We need to work with our finance team, HR team, operations team, admin team, so on and so forth, right? So we try to kind of bring leaders from all of these departments together, right, to seek their help, to seek their collaboration towards the implementation of this process. Right. Something that Jason was talking about, that training and capacity building is a very, very key element of this. Right. And sometimes these don't have to be very fancy, very extensive training. Sometimes just even talking through what ESG is, right? Like today, I think what we've seen, lots of companies are already implementing certain things. They just don't know that, oh, this is something that kind of falls under the ESG bucket, right? So that initial capacity building exercise just helps get all the leaders aligned, right, towards the outcome that we want to achieve. Right. And then, of course, the board competency. I believe Max also covered this extensively, that the Central Bank of UAE does require the board also to be very well versed with the climate related risks that the bank has. Right. And this is true for any organization. Right. So we try to also develop board competency and alignment on this process. Right. We then enter our second phase, which is the strategize phase, wherein we first define the materiality, right? Today, there are so many material topics a company could kind of go after, right? We conduct a materiality assessment, right? That and especially what we recommend is that in the first year, let's not start tracking data. Let's not kind of chase elements that we don't want to overwhelm ourselves, right? We really believe in doing few things, but doing those few things extremely well, right? Building that process, training the team members. Right, and that's where this materiality exercise is very, very important, right? We then develop a data strategy, right? This is extremely important for us. We use our technology platform for this purpose, right? Creating a data strategy on where the key elements of this entire output we need, where do they sit? Like what data from the admin team is needed, what data from the HR team is needed, what data from the operations team is needed, right? And even training those stakeholders on certain best practices on providing that data. And then lastly, here comes setting goals. Setting goals and targets, right? Of course, we today might have some data, and what we see in the first year is that lots of gaps come in. Sometimes companies are not maintaining data. Sometimes companies are not doing it in a thorough way, right? So we kind of help them do that bit, and setting targets as well. Right, that okay, today if we first start, for example, calculating our emissions data, and then we need to set a target on reducing those emissions as well, right? Maybe waste management is a material topic for us, so we start capturing data around waste, and we do want to eventually reduce our waste year on year, and maybe have like a zero waste or like 100% waste recycled policy strategy in place, right? And the last piece is implementation, right? Once we've kind of assessed, once you've strategized, once you've assessed on what the current position is, strategized on where we want to go, we then get into implementing, right? The HLB HAM team has folks from across sectors, from who have worked on a very, very wide variety of projects with private companies, public companies, government organizations. So those project managers step in. Our platform is extremely versatile, and we get into this implementation to make sure that we're meeting the deadline set by the company, and all the information is absolutely accurate, absolutely complete, right? And then we can kind of pass it on to the regulator or the investors that kind of need to look at this, right? And again, the training element comes in again. We ideally want to equip the company to kind of take control of the system, right? So training is something that's extremely important and key element across all the phases of our implementation, right? That's our three-step action plan.
Yeah, thank you so much, Arushi. Perhaps we can have Max's opinion as someone who's been in this industry for such a for such a long time, and someone from the other side of the table, perhaps. Max.
Yeah, I think we have been through a massive part of information here. I have maybe two key points to summing up all this. First of all, I think don't wait until 2027 when this becomes regulated in the UAE. I mean, even small steps today will give you a good resilience, and also you are a bit ahead of your competitors out there. And also, finally, some last words all about including the boards and the management team, of course. That is a really crucial part, but also I must emphasize that also what you say, Arushi, about training the people and the staff members here, because this is actually not for the board and management team only. It's for the whole and full organization, from the top management to all employees down in the organization. And also when it's in the broader perspective, we are into the supply chain and also different kind of stakeholders. So this is a massive plan and an ambitious plan, which will involve a lot of people. It's a really interesting journey, I can promise.
Thank you so
Thank
much,
you so much.
Max. Jason, there are a couple questions in the chat which I'd like to open up for you and Max, right? Because we only have 10 more minutes, and our last webinar we really overshot in terms of time. So I
Yes.
just want to cover a couple questions. I've tried to answer as many as I can, but yeah, I'm going to just throw some at both of you, right?
Yeah, I did
One.
answer a couple of them myself on the chat.
Perfect. Okay. Yeah.
Yeah.
Perfect, folks. So the ones that have been answered, if you want us to double click on it, right, please feel free to let us know, right? But we're only going to cover the open questions right now, right? And Jason, so this question, this one I'll kind of direct to you. Is Sneha
Right.
asks, what is the strategy for gap filling towards the social related KPI data? Right.
Oh,
Jason, would love to hear some social related KPIs that are part of a company's ESG strategy. And again, what we've done to kind of fill those gaps. I'm happy to fill in once you're done.
sure. Thank you so much, Sneha, for that question. Very important and something which is overlooked quite often. So when you speak about social KPIs, it affects, I would say, two classes of the society. One is the internal custom, the employees of the financial institution itself, which is basically a lot of HR data. Again, the strategy with respect to that is a baseline assessment where you make sure that all your ESG associated HR policies are in place. If there are gaps, it is a very simple, straightforward process to address them. Now, for a financial institution, the second class of the social KPIs is where you are dealing with your customers. Now, that has the potential to get slightly complicated. Here again, the strategy would be to first understand where exactly the gaps are in terms of existing policies and customer onboarding processes. Now, for a bank or for a financial institution, a customer onboarding process is a very sensitive bit. It has a ripple effect as well. So there again, the strategy for filling the gaps would be to amend in a very or phased manner the customer onboarding system itself, which includes the form, which includes the policies, which includes the processes which go on behind. So just as an example, at a desk or a teller onboarding a customer will at that level also there will be a change which will be felt. So the strategy will start from policies and go all the way till the actual ground level stuff. So it has a lot of ripple effects, and I think that is the way to go for all social related KPIs. But again, in a very phased manner rather than jumping all in directly.
Perfect. Perfect. Thank you so much, Jason. I think adding to that, right? Even supply chain is a very key, supply chain management, sustainable procurement is a very key element of these social KPIs. Um, so HLB Hamt and Oren are currently working on a project, again, not in the financial, this is a EPC client, and for them the entire project is so they are the tier one supplier to ADNOC, Aramco, AD Ports, etc. And we're kind of building an entire ESG framework to help them respond to their customers' ESG requirements. The customers are sending them these very long list of these big Excel sheets with just stringent requirements on policies, data management, ISO certifications. So we're building that entire ESG framework and implementing it as well. So yeah, even these social KPIs are very important. Jason, another question for you, and Max would love to hear your thoughts on this as well. I believe it was Sakina. How much so how much consideration are investors giving to ESG today before deciding on investing in specific assets or companies?
Okay. Again, great question, Sakina. So, in terms of investors, ESG has always been a very dominant factor to understand the long-term and the future-proof capabilities of an asset or an investment itself. So, from an investor's perspective, I think it is very important to have entire visibility, and that is not always possible through the conventional financial disclosures. So ESG is all about providing the complete story, the complete picture of any asset which you're investing in. So along with the financial statements, which is equally important, I would say, is the non-conventional business factors which go into an asset, which go into a company. So to sort of get that holistic picture, that is where ESG comes in, and most of the assets under management, which is in the trillions of dollars, ESG plays a very big role. And there is absolutely no, you know, private equity fund or any sort of fund managers who do not factor in ESG. ESG is like a given. So at this point, it is a very basic requirement as like the financial statements itself. Max, do you want
Yeah, I agree
to?
totally with you, Jason. Maybe I also many still, many investment decisions on the bottom line is actually they are based on the financial return on that investment. But if we can choose between two companies or funds with similar returns, I would say that in 100% of the cases, the one with the stronger ESG credentials get that winning out of that competition.
Correct. Yeah, the transparency sort of builds the credible
Yeah,
foundation over there. So, yeah, absolutely.
and
Great
also,
question, those. Yeah.
yeah, very good question, very important question. Also, I might add that when it comes to, public tenders, for example, ESG credential is of crucial part more than ever.
Yes,
Yes.
So I think
Our
you have
Yeah,
very efficient
managed.
yeah, our very efficient backend team has answered all the questions that came our way. There were
Perfect.
also certain questions on the implementation aspect, right? I think someone wanted us to explain how do we work towards implementation of each of these principles, right? I believe that's a much longer conversation. This 1 hour of webinar is not enough. Like the agenda for today was just to give you a high level view of what is required. But again, with any of you, if you'd like to speak to us, right, we're happy to do a one-on-one call. Like a complimentary consulting session for you as well, wherein we go deep. We would love to understand how your organization works and make recommendations on what you can do to comply with the law a little better, right? So you have our email IDs. I believe you've been getting emails from Rasadul, etc. As well. He's super efficient and he'll reach in. He'll kind of reach out to the right person and get that information for you. But yes, I believe we're through all the questions. If anyone has any questions, we still have about 3 minutes to go, right? But I think there's nothing. So it was lovely having all of you today. I honestly learned a lot through Max's experience and Jason's technical knowledge, right? Thank you so much, Jason. Thank you so much, Max, for joining us today. And yes, hopefully we can do more of these webinars and where we'd love to go deeper into certain elements, right? But still, this was amazing. Thank you so much for your time today.